Yes, good morning, good evening, guys. Thank you so much for watching my YouTube channel. Today we are going to talk about the Apple, and also I will play a video when Tom Lee was talking today, and I say, guys, I told you the factors. I listed the factors that Tom Lee said about talk about stocks, and we are going to listen together, and I will talk about. Let's jump with the Apple. So we have Apple, head, shoulder, and here is the neck. Yeah, here is the neck, guys. This is called the neck. Even though we have this long tail came down here, but for me this one is playing like a neck. Okay, from here to what's wrong with this thing? Yeah, from here to here we have something like a neck, and you are going to see, guys, if this one will play out. Yeah, you can see if this one will play out, and it's already below on today. This one is below. Yeah, this is the neck that I was saying, guys. This is the neck, to be specifically here. Yeah, so we have another one here which has already drawn it, but this one, let me delete this one. And we should watch Apple 208 maybe next week, because we have already sell signal. But let's listen what Tom Lee was saying. Yeah, let's see what Tom Lee was saying today.
Do you own your own home in Louisiana but still rent your electricity? For a limited time only, homeowners in specific zip codes who pay more than $70 a month in electricity bills can now switch to solar without paying a
Joining us now with this call for the markets on the first trading day of September is Tom Lee, managing partner and head of research at Fundstrat Global Advisors, as well as a CNBC contributor. And all along, Tom, when you've made these prescient calls, some of them even short term, it had to do with positive surprises on inflation. And is that going to be enough from here on out to keep the market headed higher, or have we shifted to growth worries now?
I think there's probably more growth worries in people's minds these days. So the jobs reports and claims seem to have more market reaction. I think that's going to be the case in September as well. I mean, we have the Fed meeting sort of in the middle of the month, but this week is the jobs report. I'm sure there's going to be a lot of focus on that.
Right. So what kept you positive was that the numbers were always, for the market, they were better than people were thinking. Is that going to continue to be the case? But it's no longer inflation, it's now growth. So growth will continue pretty good. Jobs will continue pretty good. You're not worried about another growth scare like we had 6 weeks ago?
Yes, I think that the growth scare is what everyone's worried about, because the July jobs report was kind of a shock to markets, and that's part of how we had that Tokyo Black Monday. I think this jobs report for August is going to show a nice rebound for growth in jobs. Hopefully it's not too strong, because of course, as you know, if it's too strong, people are going to worry the Fed might backpedal on a September cut.
So where does that leave you in terms of what is seasonally, Andrew just alluded to it, September's not great, and we always make lows in October, or we have many times, which means usually a lot of times September was not great.
I think investors should be cautious for the next 8 weeks. September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right. Market's been up 7 of the 8 months this year, so we know it's an incredibly strong market. But we also have the September cuts, and we have the election, things that'll get people nervous. I think in the next 8 weeks, people get a chance to buy. So I think it's good to be cautious, but just ready to buy that dip.
You have because you're fearless and you'll say anything. You have in the past actually talked about election-related trades and Trump trades. And do you see anything going on now that indicates anything to you? Bitcoin hasn't been acting very well.
Yeah, Bitcoin hasn't acted well. The two things we're watching to sort of look at how election probabilities are weighed is Bitcoin and energy. I think the fact that oil is being weak, even with some geopolitical risks, tells me I think the market is starting to bet more on a Trump election. But
because there'd be more production. Bad
yes.
for price, which is not necessarily the way that you might think about things, because we hear about,
So guys, there is something I want to share also. You talk about over here. I think this one, guys. So I think I played the wrong video. Yeah, I played the wrong video, and this is the correct one.
Power E-Trade's award-winning trading app makes trading easier. With its customizable options chain, easy-to-use tools, and paper trading to help sharpen your skills, you can stay on top of the market from wherever you are. E-Trade from Morgan Stanley.
It takes us to our talk of the tape, the road ahead for stocks. Definitely gotten bumpier. The question now is, are there too many potholes to get around? Let's ask Tom Lee. He's managing partner, head of research at Fundstrat, also a CNBC contributor, and also here live at Post 9. Welcome back.
Great to see you, Scott.
What's going on here, Tom?
Well, it's been a rough week. I mean, this September first 4 days were down 4%. It's actually one of the fifth worst September since 1928, so it's pretty bad. I don't think there's actually a lot of fundamental arguments for why stocks are down this much, but I think we've pulled forward to seasonality. This September to November period last year was really tough. Historically, it's tough, and I wonder if markets are going risk off early.
So you believe in the soft landing story. You said there's no fundamental reason for this. This is a debate over soft landing versus something worse. Market seems to be tilting towards something worse. You say no.
Yeah, the reason I don't think it's something worse, and we don't know, is that the jobs added was better than July. Remember, July was the hard landing fears because it was such a weak number, and in fact the number of industries adding jobs jumped to 53%. That's the best in 6 months, and the unemployment rate fell. So I think we're at a point where the Fed could engineer a soft landing, and that's why 2 weeks from now it's going to be important.
50, 25, does it matter to you?
I think it's going to be how the market interprets either number, because there can be such thing as a dovish 50 or a hawkish 50 or a panicked 50, even a hawkish 25. So I think the reality is the Fed is on a cutting cycle. That's really a good catalyst for rotation. Interest rates are going to fall, and it's going to help industries like housing, autos, credit cards come out of this recession. So I think it's good news when they start cutting.
Okay. What's happening in tech? We said that the NASDAQ's down more than 5% this week. We're having the worst week in about 18 months, and the tech sector itself is off more than 7 on the week. What's going on with that trade?
Tech, I think, revealed its hand last week because NVIDIA had a good number, but it fell. So when stocks fall on good news, it's either a crowded trade or something bad could be coming. And then, of course, they led the downside this week. I think it is part of this pull forward the seasonality because people want to de-risk, and tech is a big holding. But I think on the margin there could also be a political aspect to this. Trump's probability of winning actually increased this week in the betting markets and in the polls, and I know investors think he'll be tough on China, which would be bad for semis. So I think part of this could be fears that a Trump gaining is bad for semis.
What if there's just too much priced into these stocks at this point? Valuations have gotten a little too rich, even if they're the greatest stocks in the world, which you've made the argument that in fact they are, that this is the place you want to be maybe more than any other. And what if that's true and the multiples still don't make sense?
I think it's possible. In NVIDIA's last 10 years of history, there have been 30% drawdowns, almost 8 times of similar magnitude. Its PE, NVIDIA's forward PE was actually higher at the bottom of those drawdowns. Right now, NVIDIA's forward PE is in the mid-20s. So to me, this looks like a normal profit taking. Maybe it takes NVIDIA down to the 90s, but I think 2 years from now, that's really going to be a gift.
So when you look at all of these, are you a buyer on the dip? Are you urging people who read your research and listen to you here and elsewhere to do that?
We're close to that point, because let's say we thought that there would be a 7 to 10%, the risk of a 7 to 10% drawdown between now and November. We're almost down 5% now. I think next week we could be within that point of where we pulled forward that entire correction into the month of September. So I think we're close to the point where, I mean, I wouldn't be a seller here, and I think the lower range of the S&P's 5,400, 5,350, we're almost there now.
Do you think the move from August 5th to, let's say, September 5th was justified? Was it too much? Was it built on reality? What do you think?
It's hard to know. I know that there was panic that caused that 3-day drawdown, and the VIX spiked to 66, so we know that there was panic. But we also know there was a ton of cash on the sidelines already into August that was put to work. And I think part of this was a liquidity move, because we know the yen was highly correlated with that move, and it's kind of happening again. The yen's turned strong, and it's been putting pressure on stocks.
Power E-Trade's award.
Yeah, so guys, when you listen, Tom Lee says this thing is getting very fast, and he was worried because he was thinking that this thing is going to be going sideways slowly, but this round, it did very fast.